Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. Guys, in Bitcoin, we're seeing a lot of strength in the market, guys. I'm not going to lie, and I'll be honest with you, I didn't expect price to stay up here this long as it has. I called this drop. You guys, a lot of you guys know that you've been following my videos. Looking back here, when price was sitting right on top of this 3,800, we were approaching the end here. I called this drop. I told you that price looked like it was going to drop down to about 3,600 or so. Didn't quite make it that low. Actually fell down to about 3670 and then found some support and then bounced right back up. And this is when this was a bullish sign that we did not drop as low as that 3600, guys. Remember, I was telling you that 3600 to 3550 was a very logical bottom, or not bottom, excuse me, a very logical target from this point up here. And the fact that we only bounced here and then came back up, and then I pointed this out last time, this created, in fact, let me zoom in here to the 4 hours so you can see a little bit better. This created this nice, or validated, I should say, it didn't create it, but this confirmed this nice ascending support line that we have here, guys. We can see that it was acting as support for almost a week back here, from starting on February the 19th, or excuse me, February the 14th. Acted as support until we just took off here, came back down, had a nice little hit off it here again on February the 27th, came back up, back down, and then fell down here, and we have found support once again right on top of that ascending support line here, and came right back up. Now, I told you guys to expect a drop, and then I told you that very likely we're going to find support, and it came right back up. Again, I expected it to go lower, but it did still drop, found some support a little higher than I thought, came right back up. But I did not expect it to stay up above this, stay into this zone above 3,800 for as long as it has, guys. I was expecting it to come back up, hit this zone, and at least another test back here, this ascending support line, if not 3,600. And it's just been moving sideways here, and a nice little, I say sideways, relatively sideways, but it's been a slow, nice little trajectory up over the last 3 days here overall. So let's go back here to the daily chart, guys. So we're on day 3 of a green candle, guys. This is a good sign. This is a bullish sign. We've created each one of these days so far, assuming this closes in the green, we've created higher highs each day. Or I shouldn't say higher closes on each one of these candles, guys. So this is a bullish sign. This looks to me like we may come up and retest this zone between 4120 and 4,000. I say that because not only are we able to stay in that zone, we're able to stay in that zone with volume, sitting at about 9.5 billion for the day. That is a very, very nice compared to what we have been seeing. In fact, if I'll just, for those of you that haven't been seeing my videos, we'll point this out. At the beginning of the year, and even going all the way back to all of, basically not all of, but for most of 2018, we were looking at volume between 3,000, 4,000, 5,000, every now and then spiking to a 7 or a 6. Sometime we even had an 8 on November the 20th, but of course it got shot right back down. So every time we'd have a little bit of a spike, it would just get shot right back down to, on average, probably 4 to 5 billion. Until we hit February the 17th, we had a nice spike from that 5 billion up to 7 billion, which, okay, we've seen that in the past. Nice little spike in volume. We had a little spike in price prior to that, so that was that was good, but didn't expect a whole lot. And then we jumped to almost 10 billion the next day, and then the next day after that. And then, of course, we had a little bit of a pullback, but which you would expect. But even on that pullback, did we go to that 5 billion? No, we stayed well above 7 billion on each one of these days, hitting 10 billion. And here we are, a little over 2 weeks later, going on 3 weeks. We're on the 3rd week now, and we've maintained above 7 billion since February the 17th. We haven't seen this since May of last year. So this is a bullish sign. Now, as I always tell you, I'm not going to believe that the bottom is in until we see daily volume consistently above 10 billion. And by consistently, I mean a week or more. But until we see that, I'm not going to believe that the bottom is in, or I'm not going to get too excited. But that being said, this is getting my attention, guys, and this does look like we're going to take another run at 4,000 to 4,120. This is a very, very hard resistance, as you guys know if you've watched my videos in the past. It's an extremely hard resistance, guys. So probability still does favor price coming up, hitting this zone, a nice rejection, and coming back down to possibly test this ascending support line here. If that does hold, that'd be an extremely, extremely bullish sign. Excuse me. Looking at this, guys, if we draw our fib level from our swing low to our swing high from this latest structure, what do we see? we can see that we hit perfectly right there off that 618, hit a second time perfectly off that 618 there, guys. So that 618 has been holding strong. Again, a very, very bullish sign. But it's not just that we're seeing that that nice hit at that 618 and we're able to stay nicely above it. We're seeing structure in the market. What do I mean by that? I mean, we're seeing a nice little 5-wave structure up. I'm not going to get into Elliott wave, guys. I don't like Elliott wave in a low volume market, and this is still, even though it's an uptick in volume, this is still a relatively low volume market. That being said, there's no doubt we're seeing some structure in the market, and it's not just the fact that we have this nice little 5-wave structure up here. It's also the fact we had a very technical hit right off the 618, but since we drew this, I was able to draw this fib level. We have finally reached this high on February the 24th. So we drew our swing low, so that was our swing high. And looking at structure in the market, guys, that means Fibonacci is just an amazing thing. I would encourage you to look at Fibonacci sometime, guys, if you're not familiar with it. And I mean familiar with where it comes from, the origin, not just using it for trading. They're just incredible numbers. You find them in nature, you find them everywhere. But the thing that's so incredible about it is we start to, it's things that have happened in the past start to make sense. What do I mean by that? I mean, obviously, I wasn't able to draw this this fib level until the 24th of February. But if we look in the past here, from this swing low to this swing high, do these levels make any sense? I mean, is there any relevance to these levels looking in the past? And sure enough, from this swing low to this first wave up, where did it find the majority of resistance? We had a little wick here, but where did we find the majority of resistance? Right there in that golden pocket between the 618 and the 65 fib level. It just sat there, guys, finding resistance, and then finally we broke up above it. Where did it find some major resistance since it broke up above it? Right there at that 382. Now again, it wasn't the 382 at the time because I hadn't even drawn this, but we're starting to see in the past, how this makes sense, how there is structure in the market now that we're seeing some volume. Finally broke up. Where did it find major resistance when it broke up? Right there, it hit perfectly right there off that 382, came back down, bounced off, the 236, and then bounced again off the 382, and then finally came right back up again. And then of course we crashed down. Where did it find some support? Right on top of the 50, right on top of the 50 fib level, and then of course it broke back down right on top of the 618, came back up, and it's finding resistance. And where? Right at the 382 fib level. So we can see that these levels even made sense prior to me even being able to draw this Fibonacci level. And that's the difference between a volume market and a no volume market. In the past, we've seen a lot of wash trading, a lot of fake volume. I covered this in my last video, and I even linked to a video that Matt over at Tribe TV had done. I linked that in my last video if you guys want to look that up. But it was basically a bunch of fake volume that we've been seeing, and that's why we haven't seen a lot of structure in the market, because we haven't seen any real volume. Now, we're seeing that influx of volume start to come in. It's still not very high, but we're seeing some real volume start to come back into the market. That doesn't mean that the fake volume, the wash trading still isn't there. Sure it is, but we're seeing real volume into this market, as is evident by the structure that we're starting to see. All right, guys, zooming out all the way on the weekly chart, guys, this is, again, your daily cure for FOMO. Here it is. We are still in a downtrend, guys. There's no question the trend is your friend until that trend is broken. The trend has not been broken, so we are seeing some good signs, even possible signs of a bottom. But until that trend is broken, guys, probability favors the trend. And we are seeing this, as I pointed out before, we are seeing this bearish pennant here on the weekly chart, guys. We are seeing price come up, test the top of that ascending support line of the bearish pennant, suggesting a possible breakdown. Now, we might see a little wake up like we saw here, and then an immediate rejection. That's possible, or this thing could just break out. Again, anything is possible at this point that we're having volume come in, but again, probability would favor price coming back down, possibly retesting that ascending support line that I discussed, if not 3,600 down here. So probability does still favor, if not even lower, especially if this is in fact a confirmed bearish pennant. We're going to be coming down and find ourselves at 3,000 very quickly. That being said, guys, it doesn't mean that this at some point the bulls are going to take over, and could this be the time? We're going to wait and see if we can break above that key resistance between 4,000 and 4,120, decisively above that zone. If we can do that, guys, again, my analysis is going to, if we can break above it decisively, again, by decisively, I mean a daily candle opening and closing. If that happens, that's going to change the way that I look at this market. That's going to change my analysis consistently. But until that happens, guys, we can't ignore this bearish looking trend. And looking over here, guys, at the this is again on the weekly chart, guys. Looking at the weekly chart, coming over here and looking at our MACD. we can see that the MACD has warned us quite a few times in the past, guys, of little upticks here. If we look at price from this point to this point in the past, what did we have? Obviously, price created a lower low here. If we come over here, we look at the MACD completely. We look straight down, look at the exact same points. What do we have? We have a higher high. So we have a higher or a lower high here. We have a higher high here. That is obvious divergence. This being a downtrend, looking at the top, that's hidden divergence, and in this case, hidden bearish divergence. And sure enough, that warned us that no, this thing wasn't taking off. It did in fact break right back down. So that was, one example of that. But there are many examples of that. We come over here and we look at the next high. So we look at the next high to the next high. Obviously, this created a lower high. What do we have on the chart? Come over here, look at the exact same point. Price or the MACD created again a higher high, again hidden bearish divergence, and of course price broke right back down here. And then it happened again. Come over here. Obviously, it continued to happen. We can see it continued to happen all the way until price just collapsed down here. We can see that the MACD was creating a series of higher highs, and price was creating a series of lower highs. And every single time it broke down until there was just no more guppies left in the market to prop price up, and price just collapsed here. So why am I pointing this out? I'm pointing this out, guys, because we're seeing that again here on price. If we come over here, and we look from this point to this point, clearly there was a lower high here, obviously. If we come over here and we look at the MACD, not just a higher high from point to point, a significantly higher high here. And we have yet to have any kind of a major breakdown. So does this mean that it is definitely 100% going to break down? No, doesn't mean that at all. Does this get my attention, and does this mean that there is a good possibility that it could break down and that this trend could continue? Yes, absolutely, guys. There's no question about it. It could. And this is I think we're getting to a very, very critical point in the market where we're going to see in the next, certainly, possibly this month, if not next month, we're going to see a major move in one direction or another. The good news is, as long as volume continues to stay elevated the way it is now, as long as volume continues to stay elevated here, guys, I do think that even if price does end up breaking down here, I think there's a good chance that wherever it does find bottom, it's going to find bottom very, very quickly, and it's going to have a very, very hard bounce. Now, again, I'm not saying there's a 100% chance we're going to break down here. There's certainly not. We certainly could take out this prior high, and we could end up starting that bull run that everyone's waiting for. That's an absolute possibility. But again, until the trend is broken, the trend is your friend, guys. So, but if we do end up breaking down, guys, with that amount of volume, I don't think we're going to be down here very long. I think it'd be a nice, a very quick trip down to wherever bottom happens to be. Personally, I'm going to be going in heavy between 3,000 and 2,500 with a very tight stop loss, knowing if that breaks down, we'll probably find support all the way down at 11 to 1,200 down here. I don't think that's a probability at all. Don't mean to spread any kind of FUD at all. I don't think that's probable. I think that it is possible, though, and I'll be ready for it if it ever does. I personally would love to buy an $1,100 Bitcoin. That being said, I don't think it's probable. I'll be looking to buy somewhere between 3,000 and 2,500 here if we ever see this area, if price ever does end up breaking down. So, guys, just to get, I don't mean to spread any FUD at all. I just want to give you guys, I can't ignore the chart. And that being said, I also can't ignore the fact that we're having a nice influx of volume, and the fact that we could, in fact, be seeing the making of a possible bull run. So doesn't mean that's going to happen, guys. Just means I would play it safe here, guys. And if you are, unless you're a day trader and you're playing these little jukes here, which I'm not really discussing that too much in this video, I'm looking more of a big picture analysis here. Unless you're a day trader, I'd sit on the side, dollar cost average in. That's just basically buying a set amount at a set time every single month. Dollar cost average in, so slow accumulation until this thing does take off and until we have some kind of confirmation of a breakout. And again, guys, by a breakout, I mean a daily candle, both opening and closing above this 41.20 on Coinbase. It'll vary depending on your exchange. To the downside, watching this ascending support line very, very closely, guys. Break below that, I think, again, we could find ourselves very quickly, at least at 3,600, if not 3,400 to 3,250. So those are the zones I'm watching, guys. I'm going to go ahead and wrap it there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, we'd appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.